Hello, everybody, and welcome to today's Dynamics 365 Tech Talk. Today's topic is Finance and Operations Subscription Billing Overview. My name is Peggy, and I'll be your moderator today. We're broadcasting this session through Teams live events, and the audio can be heard through your device speakers. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name, email address, and/or phone number may be viewable by other session participants in the attendee list. By joining, you're agreeing to this experience. The recording will be available on the Tech Talks Community Dynamics page within the coming weeks. If you have questions for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions throughout today's event, and there will be time at the end for further questions. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Adil Eddy, Senior R&D Solution Architect. From the Fast Track team, we have Matthew Brown, Senior Solution Architect. And from the product team, we have Brian King, Principal Program Manager Lead, and Jody Christensen, Senior Program Manager. Adil, over to you.
Thank you, Peggy. Welcome everyone to the first session of Tech Talk series on subscription billing, which is one of the latest additions to the Dynamics 365 Finance product offering from Microsoft. Our agenda for today is to set the tone first by going through the introduction to subscription billing and the business use cases we are targeting with the new module. Then going through some of the fundamental concepts that differentiate a subscription from a usual sales order. Next, and most important, because we know you are waiting to see the module in action, we have 4 demos of approximately 30 minutes altogether. And finally, we share with you the roadmap ahead and some updates on what we are working on currently. We have some time in the end for Q&A, but please don't wait till the end and keep posting your questions. We have the product owners as well here, so let's make the best use of this opportunity. They will answer your questions throughout the presentation. Let's get started with the introduction to subscription. Subscription has always existed in the name of rentals or memberships. It was traditionally limited to industries like magazines or health clubs. However, today it is everywhere. We have member-based warehouse stores like the likes of Costco's and Sam's Club. Almost all of us already have some sort of entertainment subscription, don't we? Be it movies, music, or other digital streaming services. And not just that, but the physical products are being offered as a service now as well. I can say for myself personally that I prefer subscribing to the basic necessities than worrying about those stocking out of them at home. This may be the new thinking or the change in economics around buying versus subscribing, but certainly the subscription economy is here to stay and growing. According to a research last year, this year in 2022, the subscription economy is predicted to grow more than 18% year over year. And so it was important for us to ensure Dynamics 365 is capable of enabling our customers to the shift in economy and provide out-of-box solutions to handle their subscription contracts. Traditional sales order and invoice, which has been available in Dynamics, has focused on the AR trade, but it does not reflect the challenge of reallocating revenue as per the accounting standards, such as ASC 606 and the IFRS 15. This has led to companies utilize reports and offline spreadsheets to perform the complex reallocations manually, with only monthly true-up entries. With the recent accounting requirements, some of the AR activity has to be recasted to a GAAP-based set of figures. Until subscription billing, an invoice sales order line is meant to have one discrete event, that is posting the revenues to a single account only once. However, in the subscription billing scenario, revenue has to be spread over 2 or more periods. Without a subscription billing feature, the multiple posting events over periods is lacking. Businesses must then manually track the calculations necessary to defer or accrue the revenue. That differs from the as-billed revenue. This is not scalable even for the smallest of businesses. Customers and sales then in the organization might compel the organization to bill, let's say, the equipment with consulting services together under the same line item invoice. Yet the selling company must reallocate the revenue as per the ASC 606, like I mentioned, between the consulting services and the hardware, as if it sold those based on their relative market values. This produces a materially different set of accounting entries, different than the invoicing event. Compound that a single order by the thousands of orders, and it is clear that manual processes are not scalable. A subscription billing module is targeting specific business models. And so here are some of the common businesses who can benefit from this offering. Companies with subscriptions that are providing subscription software, or physical items and subscriptions, or let's say storage rentals, or recurring fees for equipment rentals. And then the companies that have milestone billings for the equipment installations or service completions or other professional services, as well as the companies that have usage-based billing. So billing based on the professional services hours provided, or based on consumption or usage of data, et cetera, et cetera. These are some of the common business use cases of subscription billing. In addition to that, companies that have deferrals, right, that would bill an item annually, for example, but they need to recognize equal amounts of revenue each month over the contract term. And in contrast to that, there are companies that have accruals. They're actually billing in arrears and need to recognize the revenue before they invoice the customer. And lastly, another use case is of companies that need to reallocate their revenues, be it because of the IFRS standards or the ASC standards or the internal accounting requirements, such as it could be scenarios of bundles and kits that are sold by the organizations or the companies, and they're required to have a further breakdown of accounting for their royalties, commissions, or other internal purposes. So knowing the need and the complexities involved, we introduce you to our brand new subscription billing offering included as part of the Dynamics 365 Finance app to meet the needs of the subscription economy, where the subscription-based revenue is your direct revenue source or tertiary revenue source. On this screen, you see the list of high-level features which are available already as of now, which include the ability to manage billing schedules, generation of invoices against those schedules, handling of deferred revenue, bundles, unbilled revenue accruals, as well as revenue reallocations. I now ask Matthew from my team to take you through the functionality and related concepts in detail in the next slides. Over to you, Matthew.
Thank you, Adil. So I'll start talking about some of the functionality. We'll be looking at some demos here shortly. So as part of the product that's in finance and operations, the subscription billing functionality that we're talking about is lit up as a new menu item. And effectively, the module is sort of three modules in one. So right now, the menu is collapsed to kind of represent those three different modules in one. So the first that you're seeing under workspaces is the recurring contract billing, sort of the core aspect of the module. That's what's keeping track of customer contracts, doing recurring billing over a period of time. The next submodule is revenue and expense deferrals. That's what's handling cases where customers might be billed ahead of time, but for generally accepted accounting principles, that revenue may not be recognizable as revenue until a future period. So the functionality will allow those deferrals to occur. Now, subscription billing, think of it as really all associated to the sales order cycle, but there is functionality that's lit up in subscription billing that also handles some of the expense deferrals. We won't be talking about that in Tech Talk, but there's docs, articles that talk about the expense side as well. And then the last aspect, as my colleague had mentioned, covering ASC 606 and IFRS 15 requirements for being able to reallocate revenue to comply with accounting standards really globally. So, and that module is called the Multiple Element Revenue Allocation, or MIRA for short. So what's interesting about these three submodules is that they can be used in tandem, and some of them also can be used individually. So it is possible that just the MIRA functionality, the last bit of functionality, is used on a regular sales order, and it may not even be necessarily associated to a recurring billing situation. So this functionality is now GA'd as of April 2022, and that's starting with version 10.0.25. It is a flighted feature, so to enable the functionality, the 3 menu items that I just showed on the previous screen, it is enabling 4 specific features as highlighted on the screen. There is another feature that's been available GA'd for several years now, revenue recognition. There's some aspects of that revenue recognition feature that are in addition, also part of the subscription billing. So that feature has to be disabled first to be able to enable the subscription billing feature set. Okay, next, let's look at a visual diagram that should explain what subscription billing is at a high level and how it fits into finance and operations today. So everything in the solid box is the functionality that's within Dynamics 365 Finance. Everything that is in the dotted line box represents the new functionality of what's in subscription billing. And outside of that dotted line represents pre-existing or functionality that exists today. And this depiction will show how subscription billing interacts with standard or pre-existing functionality. So let's start with the top left corner at contract setup. First, what we do is we look at our customer contracts or agreements. They could be formal, informal agreements you have with customers. That part doesn't matter. Effectively, we're looking at the key data points that are applicable for that contract, such as billing frequency, how much we're going to bill the customer, the length of time, special pricing, things like that. And then that contract setup, it really represents, it's the foundation to create all the downstream sales orders and downstream invoices. The contract setup does create standard sales orders, so it's not an introduction of a new sales order type or a new invoice type. So these subscription billing based orders would just be located in sales order list pages, invoice list pages, just like all other orders. There is the ability to depict the difference with different number sequences, of course. But the concept here is we're just leveraging core functionality that's part of finance and operations. So if we look at the 2 icons to the right of contract setup, this is just indicating that it's sort of an automation flow, an interaction flow between the contract setup, the creation of the order downstream, and then the creation of an invoice. So through that contract setup, though, is what's effectively automating the process and taking a lot of manual process, hopefully out of a business. So without subscription billing, companies would have to have reminder systems, tickler systems to go in monthly, let's say, and create a manual sales order to represent the recurring billing. That now is all handled as part of this module. And as well, some of these contracts could have accounting complexities to them. So through maybe deferrals or through the ASC 606 or IFRS 15, there may be additional steps involved. So you look at the bottom swim line of this chart indicating deferral schedules. So if there is the need to defer revenue at the time of the invoicing, there's automatic functionality to create a deferral schedule to then track how that unrecognized revenue will be recognized over subsequent months. Okay, before we look at the demo, let's just talk about some just kind of core concepts here. So first, to be able to really represent a contract, to be able to effect the kind of functionality that we're talking about, mainly looking at the customer contract, kind of the data points involved. And the 3 main concepts is how often are we billing the customer? Is it weekly, monthly, yearly? Is there a need for doing automatic contract renewals, things like that? There may also be a case where you may be billing a customer on a monthly basis, but there may be some one-time charges, setup fees, things like that. So subscription billing needs to be able to handle all a combination of different types of frequencies depending on the customer contract, including the ability to just have a one-off, one-time billing. The next aspect that would drive contract billing would be pricing. So the contract functionality leverages all standard trade agreements that are part of finance and operations today. And then in addition to that, there's custom pricing and tiered pricing. And as well, there might be price escalations. You know, let's say a contract states that automatically at the end of each year, contract automatically renews at, say, a 5% price increase. So situations like price escalations may or may not be handled by trade agreements, but they could be handled through the subscription billing functionality. And then the last item is the type of item. So it could be standard items are effectively just billing a set quantity per month or per quarter, whatever the billing cycle is with the customer. And two additional types of items are usage-based. So usage-based is commonly thought of in the metering industry for electric or water. So usage-based would be a variable-based quantity month after month. And milestone-based might be we're not at the point of determining that we can bill the customer. It may be that an event has to occur, such as the completion of services to a customer. So through those combinations, represents the setup of a contract. I briefly mentioned this already. So pricing methods are standard trade agreements from finance and operations, or kind of base list price that's on a released product. In addition to that, we have flat pricing. Flat pricing is effectively an overridden price. So if either the product doesn't have a established catalog price, or there's no trade agreement in finance and operations to represent that, or the customer has a custom price not represented as a trade agreement, flat pricing can handle any scenario that basically is not handled by trade agreements. And then in addition, there's also two tiered pricing options as well. And some of the complexity on pricing combinations will be reviewed in a future Tech Talk, because this is part of a series of Tech Talks. So some contracts that exist also can be things for contracts may be a case where there's just a minimum or a default free quantity a customer can get through the contract for a set price, and anything over a certain quantity, free quantity, might be the customer pays for overages. So the functionality needs to be able to handle overages. It also needs to handle legal concepts of take or pay contracts. So whether or not there's usage or not, the customer may still be billed, but if they go over a certain amount, they may be paying for excess over a certain amount. As well, they might have price escalations after a set period of time based on consumer price index, or it could be based on just a set percentage known at the time of the contract. And then very common in today's economy, it may be that subscriptions are entered into with a period of free trial and the front end of the contract. So we'll look at some of those things in the demos today. So let's talk about the item types a little bit more specifically and what industries they might apply to. We'll go back to standard items at the end. So based on usage items might be applicable to professional service industries, training providers, learning management systems are becoming pretty prevalent, and maybe that the customers may be able to consume course management up to a certain quantity, but they're paying for courses consumed, so that would be another industry that could use usage items. And then the most common industry thought of for usage is metering-based industries like utility companies, water, electric, that type of thing. Then the next is milestone items. So milestone items could be used by professional service providers. That might be based on legal accounting work, maybe based on training or hosting companies. And then if it's not either of those two, it's probably a standard item. So standard item would be what's most applicable to most industries. So that's usually a case where it's just a standard quantity month after month, like rental, storage, insurance, software industries, et cetera. Okay, next we will start looking at several demos. We'll start with an overview demo.
Okay, let's dig into the first demo. So the subscription billing is a new menu item. The menu item is comprised of 3 submodules that we spoke to. So the core module that everything is built off of is based on this submenu, and we're going to start right off by creating a brand new billing schedule. So all billing schedules would be equivalent, liken this to looking at all sales orders, same kind of Same kind of setup where you have a header record for the sales order and then multiple lines behind the sales order header. This will be the same approach. So we're going to create a new billing schedule. Think of a billing schedule as essentially a contract you have with a customer, whether formal or informal, that does not matter. We are going to define the start of the contract, April 1st. This assumes that we're billing monthly. Therefore, the ending contract is March of 2023. This will now create a billing schedule header record and then waiting for the lines to be added. We'll quickly add 3 items based on a predefined item list for this covering the scenario. Go back up to the header for a second. All these fields were completed either predefined, filled in from the customer card or from the subscription billing schedule group. So just to expedite, most of these settings have been defaulted, but they define the terms of this contract, additional information they needed from the customer, like their purchase order number, and then the overall billing frequency of the contract, which was set to be monthly. Okay, now let's look at the item. So in this scenario, we're going to be billing a customer for a learning management system, which is a monthly subscription. We're going to be billing them for a quantity of 1 subscription per month, starting from April through March. And the pricing is standard. What standard means is it uses standard trade agreement pricing. So if you look at the trade agreement, you will see the price of $2,500 specified. Trade agreements are not used. It will default to using the standard sales price on the release product. Now let's look at another one-to-many relationship. So behind this line, the system has automatically determined that this line is going to be billed over a monthly basis. So the details behind this record will now specify what does this look like for billing in terms of that 1 month at that 1 year contract. So between April 1st and at the end of April, we'll bill $2,500, May $2,500, all the way till March of 2023. And that, because of that, is a standard contract amount that's indicated through item type standard. Now let's look at the other 2 item types. First, let's start off by looking at items type called milestone. As soon as I specify milestone, the end date is blanked out. What this means is that this is more like professional services, where someone has to indicate when is this work complete before that line will ever be billed. As long as end date is blank, this line can never be billed to the customer. Equally, when milestones occur, it probably indicates that it's probably just a one-time use only. So billing frequency in this case is 1 time. So that we can bill this for demonstration purposes, let's assume that it was billed in early April. And then equally, pricing came from trade agreements as well. Perhaps sales is negotiated a custom quantity, maybe it's 6 units. Next, we'll look at what we can additionally bill on a monthly basis. So we'll keep item type, or we'll keep billing frequency to monthly. But what's unique about this second line is that it's going to be based on usage. It's not going to be a standard quantity 1 month to month to month. Instead, it's going to be based on variable quantity that we only learn probably after the month is complete. So standard pricing method standard, we'll use standard trade agreements. What we'll do next is we'll look at the details behind the courses. The way this works is, let's say that in the month of May, the customer reports that they have consumed a total of 125 courses using their subscription model. The variable quantity would then be entered under current reading, and then the system would determine, okay, based on the trade agreements, what would be the price for that. If this particular trade agreement has price breaks, so at quantity 100 or above, it's a preferential price of $8. Quantities 1 to 10 would be a price of $10. So this is why you're seeing the standard price of $10 change to $8. Then on each incremental month, let's say that year to date now the customer has indicated they've consumed 375 courses. System will automatically determine the delta and then charge the customer based on those incremental courses. Now the contract doesn't call for billing every course for the month. Instead, the contract calls for billing only courses that are in excess of 100 units sold per 100 courses consumed per month. So under subscription billing, there's advanced pricing options to define min, maxes, and free quantities. So the contract terms in this case indicate customer can get at least 100 courses per month under their main subscription. They're only going to be billed for in excess of that. Equally, if they consume quite a large quantity, which consumes a large billing amount, we may be able to cap the overall billing amount. So we'd say contract says we can never bill more than $2,000 a month, even if they've greatly exceeded the 100 courses. So now that we have those specified, we'll go back and view billing detail. And now we can see that out of the first 125, we're only actually billing for 25 that first month. Based on the trade agreements, 25 bill doesn't have as good of a price break as the $8 per unit. It's set at $9, but still better than the base sales price of $10. Equally, if we have a month where it shows the customer has not consumed 100 per month, let's just say the month of May is 425. That shows the customer has only consumed 50 courses that month. They will not be billed for any excess because they have not gone over that amount. So usage-based, it just gives you this flexible variable-based quantity month after month. And there's a data entity behind these tables, so this can all be integrated with another line of business application if this data is coming from an external process. Okay, now what we'll do is we'll generate a sales order and invoice based on all this key data. So we'll go into generate invoice. What we're going to say is for the first month, we're only going to bill for the first month. So we'll say the ending date, the first ending date is through April 30th. Look at the view billing schedules. This is a visual indicator to confirm that what you expect is correct before you generate that first invoice. So we're going to bill $2,500 for the base LMS system. We're going to bill excess courses of $25 over the first 100 for the first month, and then an implementation fee. In a normal situation, usage data probably wouldn't be on that first invoice. It's probably more on the second invoice from a timing perspective. And then we're going to generate all. We'll generate the first sales order, and then it will proceed to automatically post that invoice. Okay, the operation is now complete. It now indicates that a sales order has been created with 3 lines. If we look at any one of these lines, we go into the details, view billing details. We should see what was billed and the corresponding sales order that was created. So we billed $1,200 implementation fee under this order 36950, and then the invoice also has been created. Equally, if we look at some of the other lines, we should see it references the same sales order ID. So all 3 lines were put on the same sales order. Look at first line, view billing detail. So you notice the third line, because it was a one-time milestone, just had 1 record. This one, however, is standard monthly. So the next expected invoice that will go to the customer will be in the month of May. Until that's invoiced, sales order is blank, but we have billed for the month of April, and the same sales order as the implementation fee was referenced 36950. Now, if we drill into the sales order, there's really nothing unusual there. It looks just like standard finance and operations sales order. But what this shows is that there's a whole feeder system into the sales order that's based on managing that overall contract with the customer. So instead of having a series of 12 independent sales orders not necessarily connected to one another over the course of a year, through the subscription billing module, all of the sales orders generated over the contract life are all connected and referenced up to a separate module. So on any one of these individual sales order lines, there's a reference back to the billing schedule module. So at the line level, we now see this has come alive to reference back to the billing schedule. So we can always drill back from the sales order right back into the subscription billing module. Now, if we looked at the invoicing behind this at this point, because there was no deferrals involved or revenue recognition, it will look like any standard sales order where all of the revenue has been recognized to recognized revenue. In the next demos, we'll start looking at some of the accounting specifics.
Okay, so that was a demo on the overview of subscription billing contracts. What we're going to look at next is some of the accounting complexities with some revenue deferrals involved.
For this demo, we're going to be focusing on deferred revenue capabilities of subscription billing. We'll go into an existing billing schedule record here that's been created but not yet billed. You'll notice that what's unique about this one is that this particular item is set for annual billing only. The item has been created through configuration to be automatically deferred. And this billing period is from March of 2022 to 12 months later at the end of February 2023. So what we need to do is bill the customer up front the whole $995, but recognize that $995 over a 12-month basis. We'll look at the view billing detail to look at what the record is that's expected to be created to invoicing. Notice right now it's just one item. We're going to go back into this after the invoicing and take a look at how that's different. So we'll go ahead and generate the invoice to the customer. And we are going to automatically create and invoice this order. View billing schedule should confirm the one line, just to confirm that we're picking up the right record. We're going to bill the $995, generate all. At this point, it's created the sales order. We'll just wait a few seconds for the invoicing to occur. Okay, the invoicing is now complete. Now what we'll do next is go into the view billing detail. And note what's different now is previously, right before the invoicing, we only had that first line. The system's automatically created a second line with appropriate dates for 12 years in the 12 months out. So the next time that we'll be billing this customer will be February or March of 2023, and then that equally is set up a renewal record for that next year. So this is an additional feature that's part of subscription billing to set up the billing schedules, flagging a switch to say automatically renew this customer. Equally, those renewals could be done with escalation price agreements to specify a different price in the next year, even before trade agreements have been established for that future year. More importantly, to look at the deferred revenue recognition, the first line now has been fully invoiced, and we don't need to look at sales order, as that is all standard finance and operations functionality, but we'll look at what's unique about the invoice. We will look at the voucher. So without subscription billing, effectively what would have happened is that particular item, MKB201, was set up with a posting profile to record to a 4 series revenue recognized account. However, the setup is done instead through the subscription billing to say the entire amount that's being billed to the customer, at least at the time of the invoicing, is all the deferred revenue. So we have a $995 credit to the 222 deferred revenue liability account that's sitting on the balance sheet. We'll then go back to the view billing detail to look at the next step. And now what we want to do is look at how we're going to recognize that revenue over the 12-month period. What we need to know is that what the next record has been created, because there is a new record called a deferral schedule number. So we'll drill into this USMF 30 record. Think of this as essentially like a brother-sister record to the billing schedule record. We have a corresponding header with all the lines. The header is keeping track of the connection to the original billing schedule, which is referenced here. We have all the information that we need on when was that billing schedule created, what order, what was the invoice number, what is the revenue recognition account numbers, how much has been recognized versus unrecognized. So at this current time, recognized amount is 0. And the details behind that header record are listed below. And at this time, out of 12 records, the 12 records, when all the periods are recognized, will reflect the $995. On a monthly basis, what we need to do now is recognize the month of March. Equally, accounting could do this for multiple months at once. What we'll do though is we'll just recognize the revenue for the month of March only. So click that first line, click recognize. Please note I'm doing this on an individual record, but this can all be done through a periodic batch job, where this would naturally be done based on hundreds of thousands of records in a given month, and most likely probably after the month end is closed. So we'll create a recognition journal, and we want to use a cutoff date of March 31st. That cutoff date can be anything. We don't want to post this as of April because it is for the month of March, so I'll post it with a GL date of March 31st. Look at the preview just to confirm that it should have picked up one record and one record only. So 8292 is exactly 1/12 of $995. Then process this to create a new general ledger journal. So we now have the voucher. We'll drill into the details of that voucher. And now what you can see here is that we are debiting or reducing the liability account by the 8292, and we are now recognizing or a credit to the 401210 subscription revenue account, which is the recognized revenue. So this completes this demo to demonstrate the process of how to spread revenue over a period of time.
Okay, what we're going to look at next is another accounting complexity with subscription billing. We're going to look at some of the ASC 606 and IFRS 15 complexities.
Okay, we're going to look at a new scenario that requires the use of subscription billing for purposes of compliance with ASC 606 or IFRS 15. Now, in this situation, this could typically be done just with a regular sales order where we're billing the customer 2 items. We're billing the customer based on the sale of kitchen equipment and then the installation and setup of that equipment. Now, the problem though is if that went through a regular sales order, we have an issue because the customer in this case is asked for custom pricing. They wish to not be billed with a stated price under the installation. They want that to be stated at value at 0, and then equally they want to be billed for the entire amount all under the kitchen equipment itself. There may be various reasons for that, maybe their own accounting requirements. So stated value, standard pricing, standard SKU pricing would be $50,000 for those 2 items, but because the customer and the sales team has negotiated something custom, we have a balancing act to do to get the right invoicing treatment to the customer, but at the same time to have the right accounting treatment in our set of books. So what we're going to do here is we're going to override the setup price $10,000 to 0, and then we're going to change the standard price of $50,000 in total and allocate it all to the first line. Or maybe in addition to that, maybe sales has given them a $2,000 discount, so maybe the actual overridden price is really $48,000. Now, the issue there is, though, from an accounting revenue recognition point of view, we cannot state simply that the second line is a value of 0. We have to reallocate revenue across those two products. So what we'll do is we'll go to the ribbon bar, choose revenue reallocation or revenue allocation. We're going to choose a setup here that defines how to reallocate that revenue. There's multiple ways to reallocate revenue. What we're going to say is that when you have established items that each have their own respective fair market value between us and the customer, which we do in this case, $40,000 and $10,000 for each of these two products, a common reallocation method that can seek accounting compliance would be to use the pro rata value between those two items. So just simple math here, the $40,000 plus 10 is 50, 40,000 divided by 50,000 is 80%. 80% times the contract value. So we do in fact have a contract with the customer. They've negotiated a $2,000 discount, but they've asked for all $48,000 to be on line 1. So we're going to attribute 80% of that contract value to be on the first line. So 80% of 48,000 is 38,400. And then equally, even though we're not billing anything under the second line, we're taking 10 out of 10 over 50, or 20% of the 48,000, attributing 9,600 to the second line. So the last two columns here indicates what is our internal accounting, but what we're billing to the customer is what we saw on the previous screen. There are other ways of allocating. This is just a simple example. What we'll do now is we'll generate the invoice to the customer. We should get a confirmation here of the two lines. From a customer point of view, we're billing 48,000 under one line only. You'll notice the last 3 or 4 columns indicate that there is a reallocation though, but that's only for our internal set of books. This will not be reflected on the order or the invoice that goes to the customer. We'll generate the order and the invoice. Just wait a few seconds for the invoice to post. Okay, the order has now been complete. So whether we're on the second or the first line, if we go into view billing details, we should see the reallocation and we should see the invoice ID. So out of the net amount, that net amount is what's actually been invoiced on the sales order. But the revenue for our internal GAAP purposes is the $9,600 or 20% of the $48,000. Equally would see the 80% on the first line. What we'll do now is we'll drill into the invoice. We'll take a look at the voucher. So you noticed here that we have services revenue and product sales. Between those two lines, they both have different accounting treatments. So the first line is the 20% of the $48,000 and the product sales is the 80%. Now, had we billed this all through a regular sales order, we would not have been able to achieve this kind of revenue recognition. All $48,000 would have been attributed to product sales, and accounting would have been figuring out how to achieve accounting compliance offline through manual calculations and journal entries. So this is the challenge and business challenge that's solved through subscription billing. There are more complex advanced scenarios which will be covered in future demos, but this is one of the most basic demos. Thank you.
What we're going to be doing is we're going to have a series of tech talks on subscription billing. There'll be a future session just to talk about the all dedicated towards the accounting aspects, covering deferrals and the mirror concepts. What we just looked at in 8 or so minutes was highly simple or examples, but there's a great deal of additional functionality and complexities that needs a more dedicated tech talk on. And then lastly, we will look at how some bundling concepts can be handled through the subscription billing functionality.
Okay, next we're going to take a look at a couple of bundling scenarios. So in this example, bundle 1, we're selling bundle 1, which is a release product, and the bundle or the parent item has 3 children below it. We have to make a decision on how the revenue is going to be allocated across the children of the bundle, which in this case is done based on a custom percentage. So we're splitting the revenue 70%, 20%, 10% across the 3 different respective items. So let's process this on a billing schedule. Let's take a look at what happens. So the existing billing schedule with no lines on it, we add bundle 1. And before we split this into the respective children, a standard trade agreement price of $500 was applied. Let's make the math even easier and make this a $1,000 custom price. As soon as I either save this line or navigate off this line, that parent bundle will explode to the respective 3 children. And then those percentages were applied. You'll notice that the price for the parent item has been zeroed out and all of the revenue has been allocated to the three children. The parent amount is still tracked, but it's no longer part of the sales order, the invoicing, financial entries. But the relationship's still there through the visual indicator that you can see, and now all of the revenue is at the line level, and then there's a revenue split icon as well. Let's take a look at the invoice and the vouchers. So when this is invoice, this is how the invoice will look to the customer. We maintain the parent item, but no amounts are shown, just like the order that we just looked at, and then all of the revenue is associated to the 3 children items that are printed out. Next, we'll look at the voucher. So the voucher all had products that were all going to be posting to the exact same sales chart of accounts, 401, 100. But what was different about childs 1, 2, and 3, they each had different unique cost centers. So even from a voucher point of view, we're spreading the revenue across 3 different cost centers. And this may be a valid reason for using the bundling feature. Bundling features may be for strict sales and marketing purposes. We're indeed selling from a client-facing point of view a bundle, want to convey to the customer that we're selling them a bundle of multiple components, or it may not be customer or client-facing at all. It may be for internal accounting, revenue allocation to different cost centers or departments, which is this scenario. Okay, next we'll take a look at another demo of another bundling type. Okay, next we're going to look at bundle 2. Bundle 2's got 2 child items. This time we're allocating or using allocation method 0 amount, which what means is maintain the price of the parent item and keep the children item at 0. We'll process this, add this to a new billing schedule, take a look at what happens. So this item has a standard price of $600. Let's save the line. So now we're seeing the 2 children items, but now the price is at 0. What this looks like once we create the sales order off that billing schedule, the sales order will have all 3 lines, the parent, the child, with respective relationships shown with the revenue split indicators. Will be the visual indicator that there is a split, and then the amount is all maintained at that parent level. Now let's take a look at the invoice. And the printed invoice to the customer looks just like the sales order screen. So we have a bundle, the 2 children exploded, but none of the amounts are at the children level, they're all at the parent. And there is a printing parameter to exclude the children. So it looks as if we're selling a simple bundle without any of the split. One of the scenarios for this might be a sale of a bundle, but there needs to be revenue allocation for ASC 606 purposes. So the combination of bundles can be combined with the multiple element revenue allocation, which we will see in another demo. But these concepts can be applied to meet a variety of different overall business behavior treatment. This concludes this demo. Thank you.
Okay, so next we'll take a look at the roadmap. Okay, so first off, as I mentioned earlier, this product functionalities just became GA'd in April of this year. So features that were available that we briefly went over are listed here, and then as well there's feature roadmap. Brian, if you don't mind, if you could come off mute and speak to the feature roadmap, that would be great.
Absolutely. Thanks, Matthew. So just to hit some of the high points here. So I'll start at the bottom in the gray section. So looking at April 2022, that's kind of really where we GA'd the feature. So that was 10.0.25. So that was the 3 modules that you saw demoed in some of these sessions today. So you'll see the recurring contract billing, the revenue and expense deferrals, and the multiple element revenue allocation. As we go into the future, we have some enhancements that we want to make in different areas. So I'll hit on some of those here real quick. So on the quotation side of things, so if you recall, Matthew showed a slide earlier where we had all these external sources that were bringing information in. So on the quotation side of things, the idea being we want to be able to, one, take a quotation from F&O and turn that into a billing schedule, not necessarily a sales order at that point. So rather than going quotation to sales order, it could go quotation to billing schedule to sales invoice. Quotations I would kind of quantify in 3 different phases. So that's phase 1. Phase 2 would be dual write and the ability from CE, create a quotation, have that flow into a billing schedule. And then phase 3 would be, once again, relying on those Dataverse concepts, but using an external system. So I could use whatever I use for CPQ, rely on that mapping that we have set up, and then bring those things into a billing schedule from there. On On the next one, we've seen some questions in the chat here on this one. So project ops integration and project accounting integration. So these are things that we're working on. Project accounting coming first, project ops coming later. But those are things that, as far as integration wise, are on our plate here and that we're working on. So you can watch the release plans and see when we're releasing these particular things. The next one is the concept of split billing. So this allows you to have a billing schedule that's split between multiple customers. So if you had, for instance, different entities responsible for different pieces of the billing schedule, you can reflect that here with the split billing function. Next, self-service customer contract. So customers would have the ability to renew, cancel, make changes to their contract. This might be a Power App, it might be a different app, it might be a page. Remains to be seen. So that's a little bit on that particular piece. On the e-commerce side and credit card processing side, some improvements there as far as getting our particular feature here wired up and working with point of sale and all those pieces that we have on the commerce side. And then last but not least, billing service. So think of this as more of a service that can handle all the invoicing across the board, not necessarily just subscription billing, but this could handle free text invoices, sales orders. Think of it as maybe I don't have finance and operations, but I use commerce, or I use CE, or I use project ops, and I want to have the ability to do the billing, but I don't necessarily need the rev rec or any of those other pieces along with it. This would be a potential option there as far as handling those billings, producing those billings, but not necessarily, immersing yourself in the full finance experience.
Great. So I think we're doing pretty well with time. So I think we have about five more minutes or so. Brian and my colleague Jody have been busy answering a lot of the questions, 20-something questions published. There anything particular, Brian, Jody, you want to call out and talk through Q&A live?
So I think we hit a couple of them there with the roadmap, for instance, on the project integration, and then some of the other pieces there as far as integration with commerce or sales. We do have some other features that are coming as well that aren't necessarily on this list. Those things would be like the ability to terminate a one-time billing line. So you'll see those on the release plan as well. A couple other themes that maybe were in there were as far as enabling the functionality or the feature. So 10.0 to 25 or higher. So that's when it GA'd. So you need to be on that particular release or higher, and then you need to turn on the feature. And then it might be multiple features like Matthew showed earlier. So there's 4 feature control keys there. Overall subscription billing, then recurring contract billing, revenue and expense deferrals, and then Mira. And then depending on which of those pieces you're going to use, you need to turn those on. So it might be 1, it might be 3, it might be 4, just depending on your situation.
Brian, there's one in the questions that I think it would be just better to answer live. So how do you create the bundle? I thought it was only available in RevRec and not subscription billing. Can you clarify that one?
Okay, I'm reading a different question here. So, okay, here it is. So how do you create the bundle? I thought it was only available in RevRec and not subscription billing. So good question. So there's a bundle that's in RevRec, and that's a little bit different than what you're seeing here. So when you use the term bundle, it gets that kind of connotation of RevRec or revenue recognition. So that's the prior functionality that was in the product. So that's the general ledger piece that Matthew mentioned earlier. To turn on subscription billing, you'd have to turn that particular piece off. So here in subscription billing, we don't follow the same concepts that bundle had in RevRec. The bundle in RevRec needed to be a bill of materials, then it had a special handling, and you had to mark the parent item as a bundle. Here you set up the revenue allocation like you saw there. So one of the videos Matthew had showed there, you can see the setup with the parent and the child items. That's the configuration and the setup of that particular piece. It's a little bit more flexible in the sense that you have the ability to go by percentage or different options in there. You're not just stuck with the kind of like the straight up kind of simple mathematics of applying the sales price across there or the selling price. So there's a whole bunch of options as far as that particular piece is concerned.
Yeah, maybe my use of the bundle is too generic. So I think the feature is it's called revenue allocation, I believe. Is that right,
Right.
Brian? Revenue split. Yep. Any other questions, Jody, that we should bubble up, talk live?
Well, I just want to clarify about the project integration, because there was another question that just came in. We are working on the project integration now. It is not available currently. It was not in the GA. It's not available right now. We are working on it right now. So it will be released later. We haven't announced a date yet, but it is coming. So right now it's not available and you can't turn that integration on.
Great, thank you, Jody.
Matthew, just one thing also was asked a couple of times about automation. So I think we can definitely confirm Brian, do you want to?
I was going to say, in a demo, it's easy to show using the ways right off of the forms to keep that connection. In a real world environment, a customer is not typically going to generate invoice or recognize the revenue rate on the deferral schedule or the billing schedule. They'll use the periodic or the batch jobs that we have, and then have those scheduled with a recurrence based on whatever your needs are, right? If you're going to invoice once a week, once a month, whatever your cadence is, you'll set those batch jobs up and then it'll take care of that particular piece for you. You wouldn't necessarily be in that generate invoice form on every billing schedule or the recognition piece on every deferral schedule. But it does help to kind of tie the concepts together when you can see them demoed all on that one screen.
Yeah, to add to that too, I think in every one of my demos, I think there was an equivalent batch job, and one that would be too laborious to do the deferrals would just be too time consuming to follow the concept that we went through on the demo, but critical, important to know how the accounting works and whatnot. But accounting would be running, deferral recognition certainly probably on a monthly periodic job.
So there is one more question that came in. How are credit adjustments handled as it relates to the billing schedule or previously recognized revenue, deferred revenue? There is an option to do an adjustment. There's also a terminate option, and you can do a termination with a refund. So that would issue the credit on a sales order for the customer for the billing schedule. And there's also the option on the revenue side if you want to do a credit. So there are options to do that.
Yeah, any other Q&A to talk about? I think we've covered them all.
So far, we've covered them all.
Great, then we thank you everybody for coming to attend today's Tech Talk. We appreciate your time. If you have any questions, feel free to email this address. Actually, let's make it easier.
I have pasted this.
Perfect.
I've pasted this address on the chat as well in case if they have any questions.
Perfect.
Please send them over. Yep.
Perfect. Thank you. Peggy, we'll turn this back over to you. Thank you again, everyone.
Awesome. Thank you so much. A lot of great attendee interaction on this. So if everyone could have a look in the live event Q&A, I have posted a link to a survey there, and we would love your feedback on today's session and hear what you'd like to see in future events. So please take a moment and fill that out. And so with that, I'd like to extend a big thank you to our presenters and our audience for joining today. So have a great day or evening wherever you are. Okay, we are clear and they can no longer hear us.
Thanks, everyone.
Good job.
Yeah, a lot of good questions.
Yeah, Brian and Jody, thank you so much for being here.
No problem.
That was a lot of questions. Yeah.